Okay, let's unpack this. We are diving deep today into the very latest moves shaping the cryptocurrency market right now.
Yeah, and we're using insights from a pretty recent market report looking at things as of today, June 3rd, 2025.
It paints quite a picture, doesn't it?
It really does. You've got Bitcoin holding surprisingly steady above a key level.
Right.
But then Ethereum is really grabbing the headlines, seeing a significant jump.
Exactly. So our mission for this deep dive is, well, to cut through the noise a bit.
Mm-hmm.
We're taking the fresh data from this source material, trying to figure out the key forces driving the price action you're seeing.
And pull out the most important nuggets, the insights that really matter for you.
Sounds like a plan.
So where should we start? Maybe with Bitcoin's stability? The report highlights that first.
Good idea.
Yeah.
It held firm above that, what was it, $105,000 mark?
Yeah, trading right around $105,452 earlier today. Pretty solid.
And that steadfastness in Bitcoin, it really contrasts with Ethereum's performance, like you said.
Definitely. The report shows Ethereum surging 5%, trading near $2,616.
That's a big move in a short time.
It is, and that positive feeling wasn't just Ethereum, was it?
No, the report mentions it spilled over. Altcoins like Solana, XRP, Dogecoin, Cardano.
All seeing gains, right, between like 1.5% and 3%.
Yeah, exactly. Seeing that broader altcoin strength is definitely worth noting.
And the big picture, market cap.
The global crypto market cap, according to CoinMarketCap data in the source, saw a healthy increase, about 1.2%.
Pushing it up to, what, $3.31 trillion?
That's the number, and Bitcoin's dominance held pretty steady, around 63.2%.
Okay. Now, what I found particularly fascinating in the source material was the analyst sentiment it captured.
Oh, yeah. What stood out?
Well, the CEO of BuyUcoin is quoted suggesting Bitcoin might actually be nearing a reversal point.
A reversal. Interesting. Based on what?
They point to the realized HODL ratio, says it recently dropped.
Okay. The realized HODL ratio. For anyone less familiar, maybe we should explain that briefly. The report frames a drop there as an indicator
that the market might not have hit its cyclical peak yet. That's the idea.
Right. It looks at whether long-term holders are moving coins, basically.
Yeah.
Giving a signal about maybe where prices could go next.
It's a potentially crucial signal the report wants us to watch, absolutely.
And this idea of a potential Bitcoin turning point, it ties into what the source highlights as major influences this week, right? The macro data.
Exactly. Key U.S. macroeconomic data releases are coming up. We've got April's JOLTS report.
The ADP employment report.
And, of course, the big one, non-farm payrolls.
These employment reports are always huge. They give us that pulse on the U.S. economy, potential Fed moves.
And the source material makes it clear these things heavily influence how investors feel about riskier assets, like crypto, in the short term.
So while Bitcoin's holding that 105K level, it's doing so within a pretty tight trading band, the report calls out.
What was that range again?
Roughly $103,500 to $106,500. Kind of contained.
Yeah, and this contained movement is happening with, well, mixed signals globally, too.
Like what?
The report mentions rising tensions, Russia-Ukraine.
Ah, right.
But maybe some easing trade concerns between the U.S. and China. It's a complex picture.
A very complex international environment influencing the mood, for sure.
But even with all that complexity, one constant the source material really emphasizes is the continued strong institutional interest.
Oh, yeah, that's a big one. The report specifically cites those recent, pretty significant purchases, like Strategy picking up 705 BTC.
And MetaPlanet adding another, 1,088 BTC?
Yeah, these aren't small bets they're making.
Not at all. And then there's Ethereum, which has its own unique driver highlighted in the report. Very compelling.
What's that, the supply?
Exactly. Its supply sitting on centralized exchanges has apparently fallen to a 7-year low.
A 7-year low, wow.
Yeah. The source frames this as a clear signal of reduced potential selling pressure, less available to sell easily.
Which could be paving the way for more upside, right?
Yeah.
Maybe towards that $3,000 level.
That's the suggestion. That supply squeeze is a major bullish factor the report calls out specifically for ETH.
That Ethereum supply dynamic is definitely a key takeaway for you listening, despite Bitcoin's brief dip below 104K recently before it snapped back.
Yeah, that happened.
The broader market posture is described in the report as neutral to constructive. So, cautious optimism, maybe.
Sounds about right, and there's even more evidence of accumulation mentioned. Did you see that part?
The outflows from exchanges.
Yes. Over $500 million in combined BTC and ETH outflows from exchanges just last week.
And the source interprets that as strong evidence pointing towards investor confidence, doesn't it?
Pretty much. People taking assets off exchanges usually means they plan to hold, HODL, not sell them right away.
Right. Money moving off exchanges suggests conviction. It fits with those specific altcoin rallies the report highlighted too.
Like Athetherum and Hyperlid gaining 4-6%.
And XRP climbing 2%. The source even gave that specific example. Vivo Power announcing they'd acquire $121 million worth of XRP.
Details like that really help visualize where the money's flowing. It's not just abstract numbers.
Definitely.
Okay, what about the technical picture? The charts.
Looking at the technicals provided in the source, both Bitcoin and Ethereum seem to be consolidating, kind of pausing on their daily charts.
Right. For Bitcoin, the resistance level to watch is noted at $106,417.
With support down at $103,124.
And the report suggests that a clear breakout above that resistance
Could potentially lead Bitcoin towards that $108,500 to $110,000 range. That's the upside target mentioned.
But, and this is the flip side of the report notes, right?
Yeah.
A breakdown below that support level
Could trigger a correction, potentially back down towards $100,000.
So those are the critical levels to keep an eye on based on this analysis.
And for Ethereum, similar setup.
Yeah, the technical range highlighted is between $2,478 as support and $2,651 as resistance.
Okay.
A decisive move above that resistance could open the door for ETH to push towards maybe $2,750 to $2,800.
And conversely, below support. A drop below support might see a decline towards $2,350. Same kind of logic.
Got it. And digging back into those institutional moves we touched on. The investment products.
Ah, yes. The report details that crypto investment products saw solid net inflows last week overall, about $286 million.
But what's really interesting there is the breakdown, isn't it?
How so?
Well, those inflows were overwhelmingly driven by Ethereum-focused products. They attracted a huge $321 million.
Wow, so more than the total net inflow.
Exactly, because meanwhile, Bitcoin actually saw modest outflows, $8 million out of those products last week.
That's a notable divergence, the report points out. ETH products drawing huge inflows. BTC products seeing small outflows, at least for that week.
It is. But zooming out for perspective, the source material does remind us that institutions have added a massive amount of Bitcoin year-to-date in 2025.
That's a good point. Over 417,000 BTC added this year alone.
Yeah, so that demonstrates really robust long-term accumulation despite that little weekly outflow from the products.
And the report gives another specific example, right? BlackRock.
Yes, BlackRock's recent purchase of 19,070 ETH, valued at $48.4 million. More big institutional money moving.
So even if there was some suggested retail selling pressure mentioned elsewhere,
Which there was briefly.
the overall picture painted by the source material for institutions is one of strong, continued interest and accumulation in both BTC and ETH.
Yeah, but maybe with a particular recent focus on ETH, judging by those fund flows and the BlackRock buy.
Right. It seems like the institutions are strategically positioning themselves.
Even as the broader market seems to be kind of holding its breath, waiting for clearer signals.
Especially from that upcoming macroeconomic data we mentioned, the jobs reports.
Exactly. Those feel like the next big catalyst everyone's watching.
Okay, so what does this all add up to? Let's try and quickly distill the core takeaways from this deep dive into the source material for you.
Sounds good. So first, we've seen Bitcoin staying pretty stable, right? Around $105,000.
But Ethereum is definitely stealing the spotlight, that 5% surge.
Driven partly by that institutional focus we just talked about and that really significant 7-year supply low on exchanges. That's a big one.
Huge. And the report also shows that positive feeling extending to other altcoins too, gains across the board there.
Right. And this is all underpinned by what the source describes as robust institutional interest. We saw the evidence.
Yeah, those specific big buys, Strategy, MetaPlanet for BTC, BlackRock for ETH.
Plus, the overall net inflows into crypto investment products last week, even with those minor BTC product outflows and maybe some retail selling.
The bigger picture for institutions looks strong.
Definitely. Then the report highlights the market being pulled by several forces, right?
Yeah, it's a mix. You've got the technical consolidation within those defined price ranges.
The anticipation, maybe uncertainty around the upcoming U.S. macro data.
And those broader global cues like the geopolitical stuff.
And don't forget the analyst sentiment piece linked to that drop in the realized HODL ratio, pointing towards a potential Bitcoin reversal upwards.
Right. So understanding this blend, the technical levels, the impact of big institutional moves, and these external macroeconomic and global influences, it's absolutely key to navigating this market right now.
It really is. That complexity and interconnectedness is exactly what the source material emphasizes you need to see. It's not just one thing driving prices.
It's a market where multiple signals are definitely competing for attention.
For sure.
And that leaves us with a final thought for you to consider, based on everything we've just unpacked from the source material.
Okay.
Given this period of technical consolidation the report shows, and the market seemingly just waiting, holding its breath for that crucial U.S. macroeconomic data this week, what single factor do you think holds the most sway right now? What's going to be the decider? Will it determine whether Bitcoin sees that potential reversal upwards the report mentions, towards that $108,500, $10,000 range, or if it experiences a correction back towards the $100,000 level in the near term?
Interesting question. Macro data, technical break, institutional flow.
Exactly. Something for you to chew on as the week unfolds and those reports actually come out.